guys, and welcome to the post analysis video after today's expiry. So, uh, like I told you in yesterday's analysis video, there needs to be a correction. Correction is heavily needed. Going upside now after so many things like that is it'll give you a good run, but if you think about it, there's been a big rally and there's been no corrections. We came close to the correction here, but we didn't get it. So this could be a similar kind of false because last time this happened. It was big news, and we saw a massive gap up. So unless you see a massive gap up now, if the market starts trading below this 18,300, let's say, then we're gonna see a beautiful downside towards correction of 17,009. And I can tell you confirmation point as well. If you go to the hourly chart, you can actually see a structure, right? Just look at the structure. Ever since we broke out of this zone here, which is a daily structure, we have been making higher highs, higher lows. Right here, not broken, not broken, not broken, not broken. Even here, not broken. This one, not broken. Came close here, we didn't break. So the structure didn't change. Move forward, we come here. So this is now a key area for us. And the curve information point of structure changing in the hourly time. Okay. So as you can see today, there was a lot of fighting at the fib zone. Yesterday we saw a massive buying from the fib zone. All the areas fell. Today also we saw support, but it couldn't continue forward. It took rejection from the same trend line that it broke, the daily trend line, and even we broke through the fib zone and it took again resistance. So this is a very bearish sign. Most likely, I do not know whether we'll uh, gap down or not, but this is a negative sign. But if anyway gap down, we open and below this line, so we wait for it to come back to this line, get resisted from here, and we can what's it called, look for our targets. First target being here because this is the low. This is too small of a target, so you can't take that as a target. This is a good target and this is a good target, right? Also, I would like to show you something very interesting that I found. It's a new fib expansion kind of uh, indicator, I would call it, no, technical tool indicator that I've been technical tool that I've been trying out. So let's see. So I call it the swing check, right? So basically, what it does is every time there's a change in swing. Right? So if you check in the downswing, and this swing is the start of the upswing, right? So I draw a fib, and then I use the fib expansion tool to find out potential reaction point in the graph, right? I don't know why it follows it so well. I don't know how it's following it so well. But even if you just drew it on October, like after you got the swing high confirmation on 4th October, if you're drawn it, you can find out that every line has been a reaction point in some way or the other. If you see here, rejection, support, rejection, again rejection, gap up, rejection, move up, rejection, support, rejection, support, the same thing again and again with key points being 3.618, 2.618. All the 618 are called numbers, fib levels are acting as strong points, and whole numbers also are acting like strong points, like 4, 3, and 2. So if you look at that in that way, we can see two clear numbers tomorrow, and that is the 18,230 and 18,150, both of which are going to be, I think, important lines for tomorrow. But this is still a training tool, and I've still not found out how to use it properly. So this is just an observation I found out. I don't know what's it called. I don't know anything about it. I just found it out randomly. Okay, so let's go back to normal technical analysis. So yeah, this was the fib zone that was needed to hold up to it today. Even if it even this shows negativeness, but it's not confirmation. There's no confirmation. If it breaks below this, then there is confirmation, right? But now there's another key fib level. So let's say it opens a little bit of gap up, or it opens flat and then starts moving up. Then we'll have this new level, this new fib to see a rejection of, right? So if the market goes up and it goes between either 380 and 400, you can think about a short. If you can see it better on the 15-minute time frame, you can this could act like a resistance, and you can take a bounce off further down move. Okay, the key area being 18383 point. So that 18388, 18380, that area. So for that again, stop loss will be here for the main swing high. If you want to go long, I think I would suggest only going long above the 440, because anywhere else if you go long is too much of a risk on the downside, right? But short is still possible. Below this is massive confirmation. So please take care. And that's it for today's video. You can see a gap covering. Move again. If it goes below this, your targets are here and here, right? This and this. So take care, be careful, and happy trading. Right, it's going to be fun. And okay, one last thing: there's a high chance that we finally see a trending move, because these past four candles, daily candles, have been very, very low bodied. But let's see how the VIX. VIX also is very low. So as long as the VIX is low, we don't. I don't think we'll find uh, good movement, right? But if you look at it now, VIX seems to be changing a bit. For short term, if we can't actually do technical analysis on VIX properly, but it is looking possible. If it goes above 16 and all that, we might see it again going up, right? So let's be careful. Let's enjoy. Hope for the VIX to go up and option buyers can make money. Okay. Have a nice day. Thank you.